Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 1st of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. And really it's a day where the dollar has pushed back gains for the US currency against the pound sterling, up by around 0.17% overnight, against the South African rand, where the dollar has gained 0.34%, and most impressively of all, against the Chinese yuan, where the dollar is up 0.44%. Of course, the US Treasury and trade authorities are watching the performance of the yuan as part of their ongoing push on trade with China, so that's something certainly to keep an eye on. Also worth keeping an eye on Bitcoin, which has fallen back below 8,000 and in fact is trading around $7,532 per coin shortly before we recorded the video, down around 2.47% on the day and down significantly on the last 7 days. Right then, what's on the calendar? Events that may move the markets today. A fairly compact calendar here, but one that's full of important data. We've already had Caixin manufacturing PMI data out of China for July, and we'll look at that data in a bit more detail momentarily. To come, there is an ongoing non-monetary policy meeting of the ECB, so do be aware of that. And then at 7:55 GMT, we have market manufacturing PMI data out of Germany for the month of July, followed 5 minutes later by the same data for the wider Eurozone. That will be followed up by 8:30, or at 8:30 I should say, by market manufacturing PMI out of the UK for July. Manufacturing the smaller part of the UK economy, of course, but nonetheless this will feed into sentiment around the pound. Coming back to the European data, there might be a chance, of course, to infer something from the German data of 5 minutes ahead of the wider Eurozone figure. Fast forward to the afternoon and we cross over the Atlantic. At 12:15 we'll find ADP employment change data for July. That data taking on extra significance, of course, in a non-farm payrolls week. 13:30 sees manufacturing PMI data out of Canada released for July, and then we're back across the border there into the United States for the ISM manufacturing PMI for July. And then we have a 4-hour pause as all eyes switch to Washington for the FOMC meeting, the Fed's monetary policy statement and interest rate decision due out at 1800 GMT. No rate rises expected at this July meeting, but the market will be looking for guidance about the future path of US interest rates and the frequency of rate rises to come. And if you're still in the market at 23.50, you can find foreign bond and foreign investment in Japanese stocks data for the week of July 27 out of Japan. Okay then, breaking news and comment that's caught my eye overnight. First of all, Apple reported numbers last night and revenues blew past expectations as the company reported a solid set of Q3 numbers that may steady the tech ship somewhat. Meanwhile, China Caixin manufacturing PMIs fell to an 8-month low and the new orders area fell at their quickest pace for 2 years. It was a similar story in Japan, where manufacturing PMIs were also lower with soft new order components. However, the data there was ahead of expectations at 52.3 versus forecast of 51.6. However, that number was below the prior month's read of 53. Okay, food for thought, something to take away with you into the trading day and beyond. Well, why not think about this? As we've seen, China's PMI data appears to be diverging, with services measures growing or maintaining their positions, whilst manufacturing numbers are falling back. But the question I want to pose here and wanted to think about is this just the transition to a service-led economy in China, or is it a signal of a wider slowdown? Now, the chart here from the FT plots manufacturing PMI and services PMI data against each other. The Caixin PMI coming in here, the official manufacturing PMI also heading lower. Meanwhile, the two service measures are moving higher, or at least maintaining their positions. So something for us to watch going forward, I believe. Okay, time for the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about the suitability of the products for you or the risks involved in using leverage in trading, then please do contact your Pepperstone account representative and do take a moment please to read this risk warning. Thank you very much for your time.